Best-selling author, entrepreneur. She's a radio host and investor who has appeared as a guest on Fox Business, CNBC, CNN, Fox News, and MSNBC. The MS stands for Microsoft. She was one of the judges on Mark Burnett's America's Greatest Makers television show and is a weekly panelist on the current events and business show Bulls and Bears. We're bulls. She was the host of WGN's radio's The Noon Show. No kidding. I'm from Chicago. And author of the New York Times bestselling book. Here it is. The Entrepreneur Equation. Her latest book, You Will Own Nothing. There it is right there. You Will Own Nothing by Carol Roth. Your War with the New Financial World Order and How to Fight Back. Please welcome back to the show, Carol Roth. Hi, Carol. How are you?
Hi, Jimmy. Living the dream. Just excited to be back with you and talk about all the good news that's going on today.
Carol, I wanted to talk to you about this. You see this headline from Greenwire?
Yes.
It says, invest in nature might be possible with natural assets companies. Wow, that's
what Whitney Webb was telling us.
Yes, this is what Whitney Webb.
Financialization of nature.
Investors could soon buy into companies trading on the New York Stock Exchange with a unique dual purpose: protect nature, including on public lands, and make money.
Synergy.
That's very synergistic. The Securities and Exchange Commission, the SEC, is currently weighing whether to clear the way for the New York Stock Exchange to offer a new kind of investment known as natural asset companies, or NAC. Sounds very suggestive. The idea proposed by the New York Stock Exchange is to list companies with missions to improve ecosystems through management, maintenance, and restoration of public or privately owned lands, and then put a dollar figure on the resulting benefits like clean air or wildlife habitat.
Oh my God.
The proposal so far hasn't gotten much attention, but caught the notice of conservative lawmakers and property rights advocates. They've warned that companies could open a back door into strict management restrictions for public lands and waters, as well as foreign investment on federal lands, while raising questions about whether the investments are even viable. But the financial services firm Intrinsic Exchange Group, which launched the idea 2 years ago and has drawn support from the New York Stock Exchange and groups like the Rockefeller Foundation, so you know it's a great idea if they're on board, says it would give investors interested in preserving nature a place to put their money. We were looking for a private sector approach that wasn't dependent on policy. It wasn't dependent on traditional taxes, regulation, or philanthropy to price in these assets and give investors the opportunity to invest directly in nature, whether that's for climate or biodiversity. Who said that? The IEG chair, Douglas Eager. And here it is. New York Stock Exchange pulls plan for environmentally sustainable asset class. Really?
Don't they always make everything better they touch? This should be great.
The New York Stock Exchange has withdrawn from the Securities and Exchange Commission a proposal to create, okay, we know this, the asset class was to be based on the sustainable enterprises that hold the rights to ecosystem services such as carbon sequestration. Really? Carbon sequestration produced by natural working or hybrid lands. In a press release, Utah State Treasurer Marlo Oaks applauded the New York Stock Exchange withdrawal of its plan. Under the proposal, private interests, including foreign-controlled sovereign wealth funds, could use their capital to purchase or manage farmland, national and state parks, and other mineral-rich areas and stop essential economic activities like farming, grazing, and energy extraction. So let me bring in Carol. Carol, what do you have to say about this? Was this a good idea or a bad idea?
So this is a huge grassroots victory. As you saw, the entire discussion around natural asset companies, or NACs as they're known, was just completely made up by some group, even so much as they made up their own type of accounting that wasn't dependent upon numbers. It was dependent upon environmental metrics. So if this wasn't a red flag, I don't know what was. And basically, the New York Stock Exchange had taken an interest in the company, and they were trying to put them, into the public markets, as you read. So sovereign wealth funds and pension funds and all kinds of Wall Street types could then own the management of all of our natural resources, which means controlling our food, controlling our water, tourism, whatever it is. So this was a huge grassroots victory. Marlo Oaks, who you read a little quote from Utah, He was one of the big voices. He put out an op-ed in the Wall Street Journal, brought a lot of awareness. And we actually created a template and said, put the comments to the SEC. And most of the people didn't even know what they meant, but they're like, okay, this sounds really bad. I'm going to do this. And there was so much pressure on the New York Stock Exchange and the SEC that they didn't even get to comment on it. The day before the SEC was supposed to give their ruling, the New York Stock Exchange withdrew this plan. So this goes to show people, if you use your voices, you can, because this was, the little guy against Wall Street. This was a meaningful victory. That being said, Jimmy, this is not done, because it doesn't mean that NACs go away. It just means that they're not going to be publicly traded. So theoretically, they could privately still go to a sovereign wealth fund or a pension fund or, other wealthy individuals to raise money. And there are a lot of states and folks in Congress who are trying to way to codify the same type of thing using other language and other words. So it's something we have to continue to fight for. But we get so few wins. I feel like we need to take a moment and celebrate this.
So why? So I'm dumb. So I don't know why this was a bad thing. Why are NACs, natural asset? What's the S? See, companies. Why are natural asset companies bad?
So basically what they wanted to do, they wanted to end around Congress, they wanted to end around everyone and say, we are going to financialize your resources. And we don't even have to buy, let's say, farmland. We could just buy the rights to control this farmland. And in doing so, instead of using it for farming, which would actually, make sense, they would put it in for conservation or restoration. So they would take it out of what's known as productive use, whatever that land was being used for. Again, food, water, energy, tourism. Say, I'm sorry, you can't go hiking in this park anymore because it's bad for the ecosystem. And now you've got these entities, the sovereign wealth funds, pension funds, people on Wall Street who are effectively controlling all of our natural resources. That is a bad, bad thing. And not only that, then they were trying to use Wall Street to double disrupt this. So complete financialization of the resources.
So this sounds to me, that sounds like something a comic book villain would think up, right?
Sounds like the next evolution of ESG.
Yeah.
Remember how great ESG was for everything?
Yeah.
Right. Yes.
Apply that to nature itself.
Right. So think about all these farmers who I know you've been doing a great job highlighting protesting in Europe. And they're protesting because their governments are trying to not have them do things like provide us food.
Yeah.
But now instead of the government, it's Wall Street, or like in the case of the US, it's some like fund in China that's invested, and they're like, oh no, sorry, we control this farmland. We're going to conserve it. You can't grow food on it anymore.
How would there be any profit for the investors on something like that?
So that was one of the huge objections of it going on the New York Stock Exchange, because there is no actual profit. It's the opposite. They were taking productive land and they were making it non-productive. So this is like a money laundering scheme.
Market share.
So that people could, with lots of money, could control these things, but they were actually not doing it even in a way, in many cases, that would make a profit. It was like, hey, you own this land, we'll just funnel you a bunch of money so that we can take over the control of this land. And so, yeah, I mean, that was a huge objection, because the New York Stock Exchange is obviously supposed to provide investors or investments for shareholders that turn a profit and are good and being done in the beneficial interest of those shareholders. So the entire thing was just absolute loony bananas. So the New York Stock Exchange backed off of it. But as I said, I feel like too many people think like, oh, okay, it's done. And it's not done yet.
It's like the tech companies did, like YouTube and Twitch and all these things didn't actually make a profit. I don't know if they even make a profit now. They might not. But all these companies, in fact, some tech companies, I was watching this thing, were cooking the books to look like they didn't make a profit, so they get another round of venture capital to not miss out on that. And the whole goal is I'm rich enough to invest to lose money on this until you gobble the whole market up, market share. That's what they go for. A monopoly, basically. So you just take that and apply it to nature. You don't have to make any money, but you have all the market share.
This sounds so crazy. I can't believe that
Amazon can own the Amazon. Sounds right to me.
Well done. Yeah, I mean, it's not. It's beyond crazy. It's nefarious. This is evil. This is like I can't even believe it got as far as it did. That we got to the point where the SEC was ready to let this happen, and then finally everyone woke up and went like, "Oh wait, this is a bad thing. We should probably say something."
And so people. So I didn't even hear about it. How did enough people hear about it to actually stop it?
We had several big media outlets. Glenn Beck was very early on it because he knows Marlo Oaks, who, as I mentioned, the treasurer of Utah. Utah's been a very big. They've been very focused on things like ESG, and so they found out about it, and they did this op-ed in the Wall Street Journal that got some attention, and then we got a few people with big platforms who started talking about it, and we got all of their followers both online and then from the different media platforms to write in. I personally had hundreds of people who contacted me to get my template and just copied and pasted the same thing and sent it and posted it on the SEC's comments website or sent it to them. And within a short period of time, there were thousands of comments on this, and it was pretty clear that it was starting to get enough attention that they didn't want to continue to draw attention to it in this form. But it's like, it's like cockroaches, right? You kill them and then they go away and then they come back again.
Well, this is what Whitney Webb. So we have the investigative journalist Whitney Webb on our show. She mentioned it, and of course, I didn't understand.
I thought it was further off.
I thought it was further off. I didn't understand what she was even saying, really.
I remember saying,
this is what she was.
Well, I remember looking up like water. You could just start investing in just water itself a little while ago. I was like, really?
Right.
Like not in a location,
well, see, but
just water.
But that has some kind of underlying profit motive. They were trying to control water.
Yeah.
In what was it? It was in a South American country. This was Bechtel tried to take control of their water, and there was such a public outcry they had to back off of it. But it just sounds like almost a Ponzi scheme. Like the shares would be worth something as long as people put money into the shares, but there's no profit, which, as Kurt points out, a lot of tech companies run that way.
Yeah.
Yeah, I mean, I don't know if you guys know this, that Harvard, several years ago, they put together, their endowment put together this fund or this sort of shell company called Rodea that nobody had ever heard of, Rodea. And they went out into California and they started buying up all of these vineyards at above market prices. And everyone's like, who's paying for that? And it turned out that they were all affiliated with Harvard's endowment, and they were trying to get them all for the water rights.
Oh.
Yeah.
So when you say Harvard endowment, again, I'm very challenged. So the Harvard endowment means Harvard, they don't really need the tuition that people pay to go there because so many people donate money to them. They have like $40 billion in the bank, right? Is that what their endowment is? Is that what an endowment is?
Yes, I call Harvard a hedge fund with an indoctrination camp attached to it.
That's exactly what it is.
That's basically what it is. So
it was designed as such.
They basically take in all of these wealthy people who've gone there and they make these donations to this quote unquote endowment, and they manage that money as if they were a private equity firm or a hedge fund to continue to grow it and ostensibly sometimes use it for things, but now it's valued at north of $50 billion. And so all of this money that they have that they're trying to grow, and maybe they use, like you said, maybe they use a piece of it to defray some tuition or to, I don't know, put up lights somewhere, but they're not spent, they haven't spent it all. They've been growing it, and it's bigger than most of the hedge funds and private equity firms that are out there. They're a very good contender, and so they go and they make investments, in public markets and private markets. And this was one of their ideas: is investing in water and land.
You know how some schools are known for their basketball team or whatever? Harvard and Yale, and that's where we get our leaders and our intelligence community.
Yeah.
Like that's the farm. It's designed as that. I'm saying controversial. I'm saying people just think of it that way because that's what it is. So you get your great thinkers like your Ben Shapiro's, like you're like, how do we protect the levers of power from the rabble coming up? That's all that kind of thinking. How do we protect all this stuff from you, the disgusting people who live here? Democracy, food.
It's a really great point. There's a part in my book where I basically talk about the cozy nature between like the Treasury and the Federal Reserve and the government, and you will see that all of these people in these particularly financial posts have all come out of these elite universities, and many of them then go back into posts teaching or running the university.
Right.
You know, Larry Summers, who was Treasury Secretary and also, you know, one of the economic directors for Obama, he was president of Harvard for a while. So it's like this weird revolving door where they start there and then they go into government and they mess up a bunch of things and then they go back to the university.
Tragedy and Hope by Carol Quigley. If you get your hands on it, tells you the whole story of how it was designed and all that. And it's real. It's an actual, everything that's real. And Carol Quigley is from Georgetown. He's a professor that wrote it, and he was like a mentor of Bill Clinton or something. But it's very interesting. It tells you how they came up with all that stuff. It's real gross.
So that you're reading again, Kurt? This is me reading book. What you reading for, Kurt?
Oh, well, now that the pandemic's over, I figured I could get back to doing my own research.
Hey, come see us do a live stand-up show. We'll be in Bend, Oregon, Portland, Seattle, Philadelphia, Avenel, New Jersey, Boston, Palm Springs, Stockholm, Amsterdam, Rotterdam, Berlin, and London. We're adding a second show in London. The first show sold out. See you there.